Hey everyone, and welcome back to the channel. This week we thought we would do something different by bringing market analysis to you in a video. We thought we'd be able to cover a bit more in depth about what is going on in the markets, what's going on with Bitcoin, and what our short, medium, and long term vision is for the market. As you can see right now, Bitcoin is currently trading around $95,000. It's recovered really nicely since the 7th April crash down here around $74,000, and we are currently up over 25%. So a huge bounce, nice reaction from the bottom. But if you actually think about it, there's not been a whole lot of good news in the market. It's just that the bad news is now priced in. We've reacted off it, and realistically, a trade, a tariff war, whatever you want to call it, how does that actually affect the price of Bitcoin? It doesn't. But what happens is when we do see these flash crashes, the stock market dumps, we see Bitcoin follow it down, but recovers much quicker and much harder because Bitcoin's not actually affected by the news that dumps the stock market. On shorter time frames, we can see on the daily time frame that Bitcoin's kind of been in this falling wedge for a while, going back to January. If this is a confirmed breakout of this wedge, then the target is huge. So if this is a valid falling wedge pattern and we do have a full breakout, then what we would see is the target for the falling wedge would be this here, because this is the move into the falling wedge that then becomes the target. Now, it's not an exact time frame. We've shared these things before on the channel, but if we say we broke out here just around 17th of April, you would see that the target for this breakout is $125,000. That's a huge move. Now, based on this, that would be by the end of May, which to me, I don't actually think is out the question. Now, will we get to $125,000? That remains to be seen. But what is for sure is it looks like the market is setting itself up for a hugely bullish May. And there's a few reasons for that, and we'll dive into them in this video. On the monthly time frame, what is bullish is this bullish engulfing candle. So the green candle that is closing out April in just over 24 hours will be a very bullish move, and it'll have filled this wick completely. I do think we'll build on the strength from this. I think the bottom is in terms of 74k. Will we get a 20-30% correction in the next few weeks? Quite possibly. And it's just a fact of life in the crypto space. But for me, I think we are setting ourselves up for a bullish May. I think this is a very bullish April monthly candle. So roll into May. Now, if we flip over to Ethereum, Ethereum's been lagging the market for a long time. Never made a new all-time high last year when we saw Bitcoin making a new all-time high. And really, it's kind of faded over the last few weeks. We've not really saw as big a reaction as we did with Bitcoin. However, I do believe that Ethereum is going to have a very bullish end of the year. There's a few reasons for that. One, I think Ethereum is still the king of the alts. I still think it will remain number 2 in market cap. And I think the ETF inflows will eventually chase Ethereum. I think what we're seeing in crypto and Bitcoin is just what we saw in the stock market. We're seeing massive concentration, just like we did with the Mag 7. The biggest tech stocks in the stock market sucked up all that liquidity. And right now, we're seeing Bitcoin, Solana, and XRP make moves, but Ethereum's still lagging behind. But as liquidity is added to the market, I do believe Ethereum does really well in those conditions. I think altcoins start to do well. And I also think that we'll see a lot more improvements from the Ethereum Foundation and, of course, staking on Ethereum, but allowed staking for the ETFs, which I think is a game changer and will bring yield to Wall Street, which is what they crave the most. Now, looking at XRP, last week was a very bullish week for XRP. We moved up over 8% and we've continued green this week. We're still waiting to hear the final end of the Ripple lawsuit with the SEC, but I do think we are going to get more and more bullish news. Trump this week is in Washington discussing a new pro-business, pro-American policy, which apparently is going to lead to massive deregulation. Could we see some pro-crypto news out of that? Potentially. But I still think we are setting ourselves up for a huge rally in XRP when we finally get the lawsuit ended. On top of that, XRP, like many other altcoins, have ETF applications waiting to be heard by the SEC. Suspiciously, There are 72 ETFs awaiting decision by the SEC, and almost all of them have a deadline of October. Could we see a massive Q4 in 2025? Very possibly. Now, if we flip over to Total 2, similar to Ethereum, it's kind of lagging behind. No new all-time high yet for this cycle. And again, it's just liquidity for me. But that liquidity is coming. I am pretty convinced of it. Global liquidity is increasing. We've got China stimulating. We've got India stimulating. And of course, America will eventually print massive amounts of money. And we'll get on to why in a few minutes. We've seen the ECB cut rates. I think that will continue. I think if we do get some peace negotiations in Russia and Ukraine, then obviously sanctions are going to be dropped on Russia, and that will increase the global liquidity as well. What is certain is this year we're going to have massive money printing. We're going to have QE, we're going to have rate cuts, and that's going to be good for Total 2 in the altcoin market, and we'll see that breadth open up. Now, we don't normally talk too much about the stock market, but the S&P 500 is up 14% from its low. Now, it is lagging Bitcoin and crypto, like I said at the start, but this is because the stock market is heavily impacted by this trade war. Bitcoin's not. And what I'm hearing from Wall Street and investors on podcasts and reading online is that traders are very nervous about two things. One, the tariffs, the trade war, and Trump. And one of the main reasons for that is Trump doesn't worry about making decisions when the stock market's closed. So if you're a hedge fund, you're trading the stock market, imagine going home on a Friday night, long or shorter position. You have no idea what could happen over the weekend when the markets are closed, and you can't alter your position. You have to wait till Monday. That is brutal, and that is exactly not what a trader wants. They want to be constantly in control, or at least have clarity of the path forward. Until Trump delivers that clarity, I think we still see a lot of people sitting on the sidelines. But at the same time, there is obviously a concern around AI. Many traders, many Wall Street people are now talking about the inability to forecast or price a stock in its future earnings. How do you price or value a stock if you don't know that there's no guarantee that AI couldn't come in and make that industry or stock obsolete tomorrow? We're hearing stories of AI and improvements in AI every single day. It's going to absolutely crush the stock market because prices are going to drop, revenues are going to drop, and that's going to have a big effect on stock prices moving forward. We'll maybe cover more on AI and its impact on investing in another video, but for today, the divergence is clear. We're seeing Bitcoin show a lot of strength relative to the S&P 500, and I think Bitcoin is going to do similar to what gold has done. So gold for me will probably trade sideways, up a little bit, down a little bit for the next few weeks. I do think gold has hinted that there's a massive currency crisis underway. There's two things at play here. One, everybody knows the US is going to print trillions of dollars, so they have no faith in US treasuries. Why would you buy government debt when you know they're going to devalue the currency that you're holding? And then the second thing is, why would you hold US currency if you know that they can freeze it or sanction it at any point, like they did with Russia? The faith and the trust in the US dollar is no longer there. Nobody wants to hold dollar-backed debt. And of course, gold is a safe haven asset. And that's why China, Japan, big countries, India, have all been stacking huge amounts of gold over the last few years. At the same time, we're seeing less buyers of US treasuries. One of the impacts of the trade war is that there's less things being bought from China. So if the US buys less items from China, they send less dollars to China, which means China then has less dollars to reinvest back in the US stock market and treasury market. This is what's causing stocks to fall because there's less buyers, but also US treasury yields to rise because there's less buyers of government debt. As this trade war plays out, that problem is only going to get exacerbated. Now, we talk a lot about money printing and liquidity, and right now there is a fight going on. As we can see here, the Fed meeting next week on the 7th of May, there's a 93% chance that they will not cut rates. They'll hold rates steady. I think the key thing for that meeting is what update will we get about QT and QE? Will they end QT altogether? Remember, they dropped it from $25 billion per month last meeting down to just $5 billion per month in repurchases of treasuries. Now, my guess is for this meeting, we probably hear that they're actually ending QT altogether. They're getting rid of that $5 billion repurchasing and they're going to zero QT. We will get QE eventually this year, but I think we might have to wait another couple of meetings for it. Now, what's interesting right now is there's clearly a fight going on. Donald Trump tweeted on the 4th of April that this is a perfect time for Jerome Powell to cut rates. He said he's always late, which he is right in one sense, that the Fed waited too long to raise interest rates when inflation was running hot. But as Donald Trump says here in this tweet, he says that inflation's down, interest rates are coming down through yields, eggs are down, jobs are up, and of course energy prices are down. Energy is the key component here. So with the market pricing in a 93% chance of no rate cut, but Donald Trump actively telling the Fed chair to cut rates, be interesting to see how this plays out. One thing for sure, if the interest rates do get cut and it's a surprise to the market, markets are going moon. There is going to be serious price action. Okay, so if we turn our attention back to Bitcoin, I do think the divergence between Bitcoin and the stock market will continue. I do think Wall Street and traders are struggling with stock market clarity. There's no clarity in the path. Trade wars, tariff wars, whatever you want to call it, and policy decisions overall. Trump's team have actively said that they want Main Street to benefit because Wall Street have made enough money over the past few years. They're actively telling Wall Street that stock prices aren't a priority for them, and they're going to do whatever it takes to benefit the average middle class American. For me, this is bullish for Bitcoin because what it means is there's going to be tax cuts, there's going to be money printing, and there's going to be stimulus given out to Americans. Whether we see that in checks, whether we see that in benefit grants, whether we see that in tax cuts, whatever form it takes, the middle and lower class are the target for the Trump administration. And that means money printing, that means lower interest rates, and it means capital will flow into hard assets like Bitcoin and gold. At the same time, we are seeing a world where the trust in the dollar is faded. No one wants dollars long term because they know the US government's going to print and inflation's going to run hot. But one key aspect of Bitcoin appreciation in the long term is the fact that we have AI now. AI is a game changer for the world. If AI does actually bring all the productivity miracles that it promises, then we can see massive deflation. We can see prices drop on almost every single good in the world because you'll have robotics, humanoids, whatever you want to call it, making stuff, delivering things. You've got robo-taxis. You've got AI even doing surgery now with a better rate than surgeons. So prices are going to fall dramatically because of AI. But at the same time, that allows governments around the world to print trillions of dollars without fear of inflation because it will counteract the price decreases brought in by AI. And what does well in a massive money printing world? Bitcoin and gold. So I do think short term, Bitcoin's going to be bullish into May. I think we'll see a massive rally in the coming weeks. I do think we will still see a huge correction in the summer. So that selling may go away. Might be slightly delayed this year, but I think June or July we'll see a heavy 30-35% crash in crypto. But for me, it's setting up for the biggest alt season of our lives in the second half of the year. I think Q3, maybe Q4, probably more likely, we'll see a huge alt season. It could be kicked off by regulation, the SEC, ETFs, loads of things coming that I think will benefit crypto long term. So I think for now, everybody's feeling a bit better about green in the markets. I think patience is still needed. I think we are going to see some down days, some up days, and people are still hesitant that this is actually truly happening. So I think that's why we see the slow grind some days, then big explosive moves. One thing's for sure, MicroStrategy, ETFs, and big institutions are stacking Bitcoin. They know what's coming. Money printing and Bitcoin will go to the moon. That's all for today. We thought we'd do something different this week. Let me know if you liked it in the comments. Let me know if you liked it in CC Pro. And, of course, I will catch you very soon. Thanks very much for tuning in. I'll see you soon.